What about your appetite for risk, Dan? What is it going to take for you to actually change your mind on this and say, okay, maybe we have actually seen the worst?
When the spreads that I've been talking about when it comes to capital start to narrow, that money will have been made. People will start looking for ways to put their money to work. Nobody really likes to hold cash, as you've said a couple of times to me, because it's not a good use of your money. You want to find a way for it to work. But right now, there's no demand for stocks, and there's lots of supply. And every time you get a little bit of rally, it brings in this overhead supply. People are dying to get rid of the stocks they own.
Yeah, but is it fair to say that, I mean, we've seen much of the decline already? Or, I mean, we're talking about a market that's down 40% already in 2008. Clearly, many sectors are down even worse than that. We talk about financials down 40% just in the last month and a half. So when is it going to be priced in that we are going to see
well, look,
further
you're talking about is it fair to say? It's absolutely fair to say that. And your question was, why do I feel one way and he feel the other way? I'm an allocator of assets. I got to figure out the best place to put my money. He is in the stock business, and so he's got to find the best stocks to buy. What I'm saying is that stocks are not the best place to put my money.
You want
to
go to other asset classes?
Because I believe that there isn't enough demand for the stocks, and there is demand for other things.
Well, what asset do you think is the most attractive asset?
Well, I think
treasuries?
right now, no, mortgage bonds versus treasuries, but I think your cash is going to be the most valuable thing to you because they're going to have to give you everything to get your cash. Everybody in the world is going to need your cash. You see all this, this capital that's been destroyed? That's people's money that they used to have that they don't have anymore. People are going to make money like he's talking about. Companies make money, but they can't roll their loan forward. They don't make their covenants. They're going to need your money, and they're going to have to pay you tremendous amounts for it. The best thing you can do is wait for those good deals. You're in a place right now where if you've got money, you can afford to pick exactly the right deal. He's got to have 50 stocks, and he's got to find stocks that have these parameters, and he's doing it very well. But you don't really have to do that. What you have to do is figure out the best thing to do with your money. I think the best thing to do with your money, keep it safe, find ways to make money with it right now, playing spreads that are obvious, but really wait for those good
so then
deals.
Let me ask you a question, Bob. As somebody who is a dedicated stock manager, as Dan described, in the scheme of opportunities to buy stocks that you have had over the course of your career, the context that you would put the current buying cycle, if that's what you're setting up to do. In other words, how does this buying opportunity or this buying moment for you compare to past opportunities in your mind?
It's unprecedented. And so you can look at it, let's say you're already invested, I think you should definitely stay in. If someone has cash and they're sitting there and they're not invested, this could be the chance of a lifetime. Now, if they need the money in a week or a month or even early next year, I would not invest. But if you can wait a market cycle, you're a true investor, not just a saver. You're a true investor, and you have a 5-year time horizon. You're going to look back and you're going to say, boy, could you believe you could buy GE in the teens? Could you believe you could buy Eli Lilly at 30? Could you believe you could just go on and on and on?
I'm sure that's true. But I mean, the question is, will things get worse before they get better?
Wait, even before that, are you sure that's true?
Companies trading an incredible
He's not even sure that's true.
No, I'm not sure it's true, and I'm sure he doesn't know if it's true either. I think he hopes it's true, and I hope it just as much as he does. I think he's got a 50-50 chance of being correct, that this right now is the buying opportunity of a lifetime. But as you know, the people who told you that a month and a half ago are driving taxis right now.
Right.
It isn't really exactly obvious.
You want the last word, Bob?
I would just say this. Money is always looking where it's going to be treated best. The risk-free rate is collapsed. The 10-year Treasury note's at 2.75. PE should be at 33, not at 12. And so now if interest rates go to 10%, PEs will compress to 10. I've never seen risk-free money collapse and PEs don't eventually expand. That is going to happen.
They're adjusting for the growth rate, which is absolutely, completely uncertain. And he's picking stocks, which are wonderful picks, by the way. He's a very smart guy. But he's picking them based upon price-to-earnings ratios in which the earnings numbers are not correct.
Which is the point Dylan made.
Precisely.
Great information, gentlemen. Thank you very much.
Great conversation, you guys.